morning, and welcome to the Global Malaysia Series brought to you by the Economic Transformation Program. Now, this was put together with the aim of inspiring Malaysians to enter the global market, showcasing some of the most internationally successful Malaysian businesses, brands, and products. So far, we've had 4 of these sessions covering topics like plantations, retail, aviation, banking, and now today, telcos. And so it's an irony for me to ask all of you to switch off your phone or put it on the silent mode for today's session. So maybe we just make sure, just have a look at your phone, it's on silent mode. Now, when mobile was a mere catchphrase in the 90s, few had an inkling of its coming global influence. Barely 20 years on, telecommunications today is a $4.7 trillion industry with service revenue alone accounting for nearly 3% of global GDP. Now, in other words, whoever controls the data and internet highways controls the world, and with Asia's bounties largely remaining a frontier market, there is everything to play for. Now, 2 familiar companies are represented today to discuss this topic on regionalization. Axiata is one of the largest Asian telecommunications companies and has controlling interests in mobile operators here, Indonesia, Sri Lanka, Bangladesh, and Cambodia, with significant strategic stakes in India and Singapore. Dato Jamaludin Ibrahim, Managing Director, President, and Group Chief Executive Officer of Axiata Berhad, is here. And since joining in 2008, he has been responsible for transforming Axiata into a regional champion. And prior to this, he had served in Maxis Communications Berhad for 10 years and further 16 years of experience in the IT industry. He earned the accolade of Malaysia's CEO of the Year in 2000 by American Express and Business Times and was inducted into the Asian Mobile News Hall of Fame in 2004 for his services to the mobile telco industry. He was also awarded the Asian Mobile Operator CEO of the Year by Asian Mobile News Awards in 2007 and the Asia Pacific ICT Award for CEO of the Year in 2010 by Frost & Sullivan. And this is where I segue into Telenor, pun intended. Telenor Group is one of the world's major mobile operators with more than 160 million mobile subscriptions. They have mobile operations in 12 markets and additionally 17 markets through their ownership in Vimpelcom Limited. Representing Telenor is Executive Vice President Sigve Brekke. He's also head of Telenor Region Asia and chairman of DG.com Berhad. He has previously held a number of executive positions within the group, including as Chief Executive Officer of Total Access Communication in Thailand and Managing Director of Uninor in India. And he has served as the Deputy Minister of Defense in Norway in 1993 and has held positions at Norwegian Defense Research Establishment. He has also held an associate position at John F. Kennedy School of Government at Harvard University. So, the organizations they lead here in Asia are blazing trails, equal parts competitors, colleagues, and confidants. Today, however, they come to us in the guise of evangelists, and they're going to be discussing the topic of regionalization. So let me help me welcome the gentlemen up on stage, Dato Jamaludin and Mr. Sigve. Our esteemed panelists for the 5th edition of the Economic Transformation Program's Global Malaysia Series, and moderating today's session is none other than BFM's Khoo Chuang. Over to you, Chuang.
Frida, thank you for your introduction. Gentlemen, in the mid to late 1990s, when both your organizations made the very difficult decision to expand out of your home countries, it can't have been very easy. This was a time of great change, regulatory change. The internet was making its headwinds into the global economy. The decision tree that enabled you to go out of your comfort zones, the warm and fuzzy confines of your country, can't have been easy. Perhaps, Sigve, you can tell us what it was like in those days, those early hedonistic days.
Well, first of all, thanks for inviting me to this session. To answer your question, it was not really a sophisticated decision tree. It was quite simple. It was a belief that one day mobile phones will be affordable for the masses. One day people will be connected through wireless devices. One day the world is going mobile. That was the simple philosophy. The first investment that Telenor did in Asia was actually in Bangladesh, 1997. And people said, you guys must be either out of your mind or you must be seeing something that nobody else see. Because this is one of the poorest countries on the globe. How come you think they will be able to have afford mobile phones? And going back, the first business plan, I think forecasted that 10 years later, meaning 2008, 2009, we estimated that there will be around 1 million mobile subscribers in that country. So we thought we were very bullish in the business plan. Today, our company, Bangladesh, has 47 million customers alone. So I think the philosophy that we had, that mobile phones are going to be for the mass people, that happened to come true. And that is the wave we have been riding on when we invested also into 5 other countries in Asia, just to take the opportunity of big markets, big populated markets, demanding mobile phones, and us being there to provide them with services.
Sigve, your foray was with Grameenphone, and Dato Sri Jamal, you were not in Telecom Malaysia at the time, but at the time, Telecom Malaysia bought Kasacom in Cambodia. Now, in terms of deciding which countries to go to, clearly Cambodia and Bangladesh are not top of mind recall. How does a company decide which countries to go into first time around?
Thank you. Just like, I guess first, thank you for inviting me to the session. I noticed we have very contrasting dress code here. And to be frank, I don't normally wear tie myself, but I guess I thought everybody would be wearing tie, that's why I'm wearing tie. I guess I'm quite wrong. About Axiata, I guess, for me personally, it's a bit different, right? I joined the company, TMI then, when the footprint has been built and acquired way before my time, over the last many years before that. So it's kind of a different story before I answer your question. So I inherited most of the footprint already. In fact, they've done an excellent job to build a footprint that is a tremendous advantage to us right now. In fact, ours is the other way around. One of the key decisions I've made within the first month of me and joining the company is to just slow down on acquiring a new footprint. Let's get our act together. And we were perhaps average performance is most of the country. So I said no, we don't want to do that. We want to make sure that every of the operators in every country that we have is the best performer in every country, in terms of revenue, profit, process, people management, everything, in every aspect. So we spend a lot of time organically actually build and develop every of the companies that we have before we would want to invest. That's kind of different story. Now, we have done that for most part, and for the last 5 years, most of the, in fact, all of the operators that we have in the countries where we have management control perform the best or one of the best in almost all the measurements. So now moving back to the question, of course, we are now in a position much better than before to say, yes, we have the people, we have the assets, we have the capability, and so on and so forth, to start looking into more acquisition. And in terms of going back to your question on new country, obviously we have not really gone into a new country because we are restricting ourselves to ASEAN and South Asia because we want to do very well within this region. But we did, as is publicly known, look into Myanmar as one country we wanted to venture. In trying to decide whether we want to enter into the country, obviously we look at in case of Myanmar, frankly, it's so straightforward, right? It's basically a one-player market, 1.5 player market, so to speak. Penetration's way below 5%, huge population of 70 million, and the opportunity is perhaps the last 1 or 2 countries in the world that have this kind of environment. So it's pretty clear. But if you want to talk about in general, we do look at the socioeconomic, political, of course, the market structure, competition, and so on and so forth, and to decide whether we want to go to the country, and finally, where do we differentiate within that competitive environment? That's how we would, before we decide to go into the country.
Gentlemen, in both your organizations, the government plays an instrumental role, with Telenor 54%, the government of Norway, and with Axiata via Telecom, 39% Khazanah National, the sovereign wealth fund of the country. In totality, though, You've got well over 50% government fund ownership. What does this mean, gentlemen, in terms of your organization, in terms of the stability or otherwise longevity, in terms of the management control of your organization, Sigve?
Yeah, let me first explain how it works in Telenor. You are correct, the government, Norwegian government, owns 54% of Telenor. The rest is in the stock market. However, the government do not influence or manage Telenor on a daily basis. As a majority shareholder, of course, they nominate people to the board, but the entire board are having directors which are professional. There is no government bureaucrats or any nomination like that. And the management, there is no bureaucrats in the management either. It's a professional run company which happen to be owned majority by the Norwegian government. And I think that's important, because if you want to do this, you need to distinguish between ownership and management. But then to your question, I think it helps us, because what we have seen in Asia, that there are 2-3 areas which I think it's very important if you want to go abroad. One is that you need to take long-term commitments. This is not a place where you go in, you build a business, you make some money and you go home. That doesn't work. You need to take those very long-term bets, and you need to be able to go through all the ups and downs. And we have been through a lot of ups and downs lately now in India, or we also happen to get a license in Myanmar. There will be a lot of ups and downs before we start taking out dividend from our Myanmar investments. So you need to be able to do that, take those very long-term positions. And to have the government or a stable majority owner helps you to do that. Secondly, you need to be very pragmatic, and you need to be able to stand up even though when you are being challenged, not run away for short-term reasons. And that's also something that a long-term government majority shareholder helps us to do. So I will say that overall, that helps us as a Norwegian company to go abroad and especially deal in markets like we are in Asia.
Yeah, Sigve, I mean, your experience in India really validated, I guess, the presence of the Norwegian government behind you. But with Dato Jamal, with Axiata, there's a slight distinction here, because Khazanah National is your government representative with 39% of your shareholding structure. Is there a clear distinction between how, for example, a government might help manage Telenor versus how Khazanah might help manage Axiata and its forays abroad?
I'm not sure exactly how we can compare, but generally similar, because the Khazanah, representing the government, has a very long-term view of how we operate in all the countries that we in all our investments. So very similar. Because of that, we can take a very long-term view. And a similar story is using India again, right? And very similar when when we merged our small company those days with another bigger company, and of course our short-term investors were not very happy about that because they look from a very short-term perspective. But we have a strong backing from Khazanah. We say that our view is not 1 or 2 years or even 3 years, way beyond that, and we think we did the right thing. And of course, truly enough, when we bought, the price now is a lot higher than when we first bought. But it went through ups and downs, just like Sigve mentioned, more downs than up in the last few years. But fortunately, it turned out to be the right decision. But again, only because we have a shareholder like Khazanah who look at it from a very long-term perspective. So that really helps.
Does it alter the risk profiles in terms of having Tan Sri Azman Mokhtar on the board to help you say, hey, let's take a bit of a punt here, as opposed to, say, a Norwegian government, which might be a little bit more reticent, Sigve, do you think?
If I didn't really
a bit more risk-averse, perhaps, do you think, when it comes to a government as a 54% owner?
If the government is more risk-averse?
Yeah, I think.
No, I wouldn't. Well, it depends what you mean by risk. Of course, they will not take risk like a hedging fund does. We are not in that business. So they will be more risk-averse, especially when it comes to, I would say, governance. So, for example, when Telenor is looking at entering a new country, take Myanmar as one example. We decided then to bid for a license in Myanmar. There were 93 bidders, and we happened to be one of the 2 that actually won the license. When that was discussed in Telenor, also with the owners, I think the main discussions were not really about the business plan as such. It was more about how will we be able to operate in such an environment. because we have a very, very clear policy when it comes to absolutely no tolerance for corruptions, when it comes to working conditions, when it comes to way of doing business. So I think it was more discussions around that. So if you think about a risk averse being, can we operate in some of these markets? Yes, the government as a majority owner will be risk averse, and they will expect us to follow the policies that are set by the government as a majority owner. So this is important for us. But if you think about risk averse, about taking bets, I will say no. And it's exactly the same as Dato Jamal said, these long-term perspectives. When we entered India in 2008, the Telenor share price fell 25% in one day. And people, the minority investors, didn't like that at all. And since then, they have been criticizing us heavily until the last couple of quarterly presentations, where we finally start getting a little bit recognitions for what we have done. And starting to get a little bit understanding that if you want to be a growth company, you need to be where the biggest growth is, which is in India. So I think it's not. I wouldn't say risk averse. I would more say that they will be very specific on certain elements when they are asking us to consider risk. It's not only about the money. It's also very much about the environment and the way we do business.
Of course, your challenges with Unitel at the time, Sigve will form a large part of a discussion later on. But related to this theme, Dato Jamal, your experience today is probably the second part of your previous work experience, having already made incursions into Indonesia and India with your former employer. In the example of Natrindo, it was expensive, it was challenging, and it resulted in the delisting of your former employer. Do highlight the lessons, I guess, that you learned at the time when you went into this behemoth of a country for the first time in the mid-2000s. Indonesia, yeah, Excelcomindo at the time.
I won't point out Indonesia per se, but obviously, we moving to a new country. That one of the lessons learned is about picking the right partners is extremely important. The person who has the same kind of overall long-term objectives, right? This is extremely important. And secondly, obviously, you have to make sure you have the right team. Hopefully, predominantly local team to help you manage the team to the company. So those are some of the lessons learned. Perhaps it's again and again recurring in many of the situations involving my own experience plus what I've seen and observed.
Dato Jamal, you are in Indonesia with Axiata right now, but Sigve, Telenor is not. And referencing your earlier discussions in terms of corporate governance and transparency and disclosure and corruption and your aversity to it, is that the reason why Telenor is not in Indonesia despite its positioning in Europe as the Asian experts?
No, not at all. Before I have the job I currently have, I used to be head of business development for Telenor in Asia. And one of the countries I really looked at back then, this is many years ago, was Indonesia. So we have been looking for potential entries into Indonesia for many, many years. And if that opportunity comes around, we will like to be your competitor, Dr. Jamal, in Indonesia. So I think, but the way we look at this from Telenor, just to explain that, we have a very, very clear strategy, and I'm coming to Indonesia. Our strategy is we go only mobile, no fixed, no broadband, no broadcast, nothing like that, only mobile. 2, we go mass market. So we talk about connecting everyone to mobile, and now our slogan is Internet for all, with underlying the word all. So we have mass market. Thirdly, we need to control our operations. So we are only entering opportunities where we can be in operational control. Some of the ventures we have is 100%, some are with partners, but we need to be in control ourselves, shareholding control. And lastly, it has to be a manageable, I will say, regulatory regime. Those are the things we are looking at. So Indonesia definitely would fit all these criteria. It's just that there is no entry opportunities right now.
Dr. Jamal, some might argue quite convincingly that your role at Axiata, Khazanah National as it were, has benefited from your previous experience in terms of the trials and tribulations of investing in India and Indonesia. Now that you're doing regionalization part 2 with Axiata, what kind of lessons have you learned from that previous episode?
I guess in a way, quite similar to my previous answer, I think the most important part is having the right team managing all the countries. I think we have built an interesting model, what I call an empowerment model, whereby we set at the group level, we set the framework of what is the strategy, what's the HR philosophy that everyone must adopt, what kind of general synergies that we would like to have with each other, what kind of governance, extremely important, and financial discipline that everybody must have and adhere to. Within that framework, we allow tremendous empowerment to the countries, that all the countries they operate in the respective countries, because they know best how to run the company locally. I do not know, perhaps sitting here in KL, how the best pricing in Bangladesh or Indonesia or Cambodia and so on. They know best, but I know what is the framework, what is the strategy. Is our strategy as a price leader? Is our strategy is customer, product, services, innovation, and so on and so forth. That we agree together, but beyond that, they will manage that. So that's, of course, there are many other lessons learned, but certainly empowering management is extremely important.
The one thing that I guess that stands out, Dato Jamal, in terms of your regionalization strategy, the 4 key pillars: operational strength, financial performance, of course, talent, and the CR side of things. But operational excellence is the one thing that we've been told you push first and foremost. You don't mind coming out into a market as a distant number 3 or even a distant number 2, so long as over a space of time you do get to your number 1 and number 2 position. Why have you gone down this path?
First, like I said, I kind of inherited most of these companies already, and when I inherited these companies, many of them were actually number 3 or or even number 5 as in India, but because of focus on, like I said, people, management, and as you kind of alluded to, operations and financial discipline, all of these companies have done extremely well. XL, for example, were very distant number 3 and half the size of number 2. And today is the second largest already in Indonesia. Robi in Bangladesh is just passed as a number 2 from number 3. Idea in India were distant number 5, now number 3. Moving perhaps one of the best performers in the industry, and so on and so forth. So I guess you mentioned it quite correctly, the 4 levers have made most of the companies became top performers in their respective markets.
Okay, so it's more of a legacy issue. Sigve,
could I also comment on this? Because this is a very interesting question. And I think what our strategy is not very different from what Axiata's is. Actually, I think we are comparing ourselves with Axiata, and we have high regards for what they do. I think, and this some lessons from our side also that could be valuable for other companies that want to go international. I think the first one is these long-term bets. I'm not talking more about that. Take very long-term positions and be ready to ride out all the ups and downs. 2, we need to be in operating control. Because when you move into this type of places, if you are not able to do what you think you are good at doing, it's very difficult to influence a local partner that has his or her business practices. 3, you need to stay very close to the customers, and that's same as Dato Jamal said. There is a limit to how much synergies you can take out across. There is a limit to how much standardization you can take out across. Because if you have to jeopardize then that with the local approach you have to the local market, it will never work. So you have to have people very close to the local customer, and the local customer's needs are different from market to market. That's why we also have a model where we are delegating a lot of authority. The local management have much more authority than they would have in many other global companies. And then I will say it's about the people. So what we do is trying to build cultures, and actually trying to have culture as a competitive advantage. Because in our business, it's very difficult to have sustainable competitive advantages. We don't have any products. We don't sell any devices. We don't sell any hardware. Our product is up in the air. And we are using the same network, the same distributor, the same marketing, the same as everyone else. So what we try to do is to build competitive advantage through identities, through company cultures, through the way we work. And the only way you can do that is through people. So we are trying to build a base of people that we can send around. In Asia today, I have around 100 people on my list, which I'm sending around. So, for example, when we now are going to Myanmar, I already have 50 people from other Telenor companies in Asia that goes into Myanmar and redo what we have done in other markets. And that's the only way you can actually also export competencies and also build cultures that can be a competitive advantage.
Dr. Jamal, in India, where your stake in Idea Cellular falls just a shade shy of 20%, that country, as well as Singapore, I think, with just a shade under 30%, are the only two overseas entities where you've got less than majority. Does that enable Axiata to impose its will and its disciplines on those markets?
The answer is no in general. Of course, by virtue of the fact that we are minority shareholders in these two countries, but we are and have been involved in a lot of strategic discussions for M1 in Singapore and Idea in India. Many of the discussions in terms of what kind of investment, how do you invest and all that, we do have a lot of debates and discussion with the respective parties. Of course, not all they agree with us and not all we have the same positions, I guess in a healthy discussion, but we do have reasonable influence in these countries.
India is the elephant in the room, I guess, gentlemen, and Sigve Telenor had its tribulations and trials with its former partner, Unitel. At last count, accumulated losses of somewhere in the region of $3 billion US, and now in your second foray with Sandeep Valea of Lakshdeep Investments. How challenging a time was it when you lost all 122 of your, in fact, several players lost all 122 of their telecoms licenses as a result of bribery and corruption scandals in that country? In fact, did it validate the concerns of the Norwegian peoples?
Well, there are two ways of looking at India. You can either look at it as an elephant in the room, this is a big problem, or you can look at it as the leopard in the room, which has so much potential, it's so fast moving, it's so competitive, it's so much to learn. We have chosen the second one, not the elephant. Because the reason why we entered India was that we are a growth company. Telenor is standing out in the European landscape with actually having still 4-5% growth year on year on our turnover, our top revenues. There's nobody else in Europe having that anymore because the market is saturated. Because of that, we are actually standing out and doing very well. And this is all because of Asia. And it's all because of growth in the Asian markets. And if that is your core competencies, if that is something you think you are quite good at, then you need to be where the biggest growth is. And that happens to be India, knowing that you cannot as a foreigner enter China. So if you do that, you need to have the stomach to ride it out. When we entered India, we entered as operator number 14. There were 13 guys ahead of us, whereby Idea was one of them. And people said, are you absolutely crazy? There is way too late to enter this market. You will be absolutely too small, and this is not going to work out. And we said, we think that long term, this is going to sort out. There will be consolidation, market rationalization, and so on. Right after we entered, the price war started. The average revenue per customers fell 30 to 40% in 1 year. It was a really tough competition. We were able to ride that out with implementing a low-cost model, and then the Supreme Court took away our license because they basically said that we need to redo all the wrongdoings that had done in the past. We had nothing to do with that. Then we have the choice. Do we look at this as an elephant and just say that this is it, we give up India? Or do we say that the reason for entering India in the first place have not changed? Yes, there have been surprises. Yes, there have been struggles. Yes, there has been unfortunate happenings, but we still have that long-term view. And we chose the last one. We chose to fight it out, and we got back our licenses. And that would only have been possible if we... It was only possible because we had that majority shareholding, and it was only possible because we also tried to focus on what matters most, building up an operation. Today, I'm really happy that we did that. I'm really happy that we both entered India and that we didn't give up, for two reasons. One is the growth factor. We are now fueling Telenor with growth from India. But the second factor, which we actually didn't really think about, that is how much we can learn from India. We knew that we can redeploy some of the distribution tactics and all that from other markets. We knew all that. But we didn't understand how much we can learn from India. And India today, it's, I will say, fueling us with talents. India, it's out of the 6 markets we have in Asia, it's the place where it's easiest to actually recruit talents. There are the number of people in India that are willing to go abroad, even into markets which is not on the top of the list for people to live. A lot of Indians. Secondly, when you are forced to compete in India, you are also forced to think differently. It challenges every conventional wisdom you have in the way we operate in the rest of the world. And you basically have to think innovative. And innovation in telecom today is not about fancy products. It's about costs. It's about doing things more efficient, doing it cheaper. And India, for us today, is becoming an innovation center. And we are actually taking a lot of the learnings we have from India, exporting now into the other operations in Telenor. So it was worth fighting it out. It was tough, but we didn't give up, and we stayed focused.
Indeed, and in Asia accounts for 44% of global revenues for Telenor, so that does seem to be endorsing itself. Dr. Jamal, when you gaze askance at Telenor's experiences, as recently as 2 years ago, given that the fact that you're a shade under 20% and your partner in India is Aditya Birla, a conglomerate, 36 countries, 150,000 employees around the world, massive conglomerate, how do you install the safeguards in your investment in India such that a similar experience does not occur?
Okay. Before I answer that question again, I have to relate back to what Sigve mentioned. Quite a similar, not exactly, quite a similar story. When we started, we already had a small company, 2 Circles, which is among the 22 circles in India. Very small company. And when we decided to merge and be part of Idea, which is then 5th largest company in India, and to merge and pay quite a lot of amount of money, 143 rupee to be precise, to merge the company. Just like what Sigve mentioned, we were told that you guys are crazy. Maybe not as crazy as Telenor, but you guys are crazy, doing the such thing. 14 players then. And again, fast forward, similar story. We went through a lot of trials and tribulation, and we managed to become 3rd largest now, the best performer from the highest market share gain is actually in India among the 14 players, actually Idea, our company. So they've done extremely well and quite profitable today. And for the first time this year, gave out dividend. So pretty good story in that respect. And the same story is that it's all about people and how they've managed extremely well, and it's about cost efficiency and so on and so forth. Now back to your question. In our case, obviously, because we don't have direct control, we don't have management control. We have one director and one alternate director heavily involved in the discussion at the strategy level, and I do visit quite often in my team and all that. We do have certain kind of synergies and lessons learned, best practice from each other. So it's been pretty interesting. And I must say that just like what Sigve mentioned, is that there's a lot to learn from India, the way they manage every cent. I mean, this is talking about less than 1 cent per minute cost, and yet they become profitable. Of course, they have the benefit of a massive scale, but the way they manage everything has been extremely, I would say, in every element of their operational excellence is should there be a lesson to all other companies in terms of talent, in terms of pure operational capabilities, and so on and so forth. So we same thing. We actually, our CMO for one of the our countries has been extremely well, and he was from Idea. Now we have senior people from Idea in our corporate center. We also have one of the CTOs, senior technology guys at CTOs, one of our subsidiaries, and so on. So we have importing a lot of people also from India and to be part of our global talent, so to speak.
Referencing your trouble, in fact your challenges, I think is a more polite word for both of you gentlemen. Myanmar is a country which you brought up earlier and for which you've won a license along with Qatar's Ooredoo, beating out the whole plethora of other competitors including Axiata. What kind of lessons have you brought to the table there, where obviously this is a country which is 60 million people, tasting democracy for the first time in 50 years or so, but against the backdrop of a military junta which continues to exert its influence?
Yeah, I will be quite, what should I call it, modest about the challenges in Myanmar. This is not going to be easy. And one thing, it's more the political part of it. You are dealing with a new government. You are dealing with a government which do not have all the rules and regulations in place. We are yet to get the license, even though we were awarded the license back in June. A lot of issues. We are also dealing with a previous military regime, which we also need to be careful about. We will also have, I don't know how many letters we have got from NGOs, from transparency organizations that tells us that we will watch every move you do. So all this, we are absolutely take very, very seriously. On top of that, we are dealing with a lot of operational issue. Think about it. We have committed to roll out services out in the small villages where they don't have any power. 1/3 of the country does have electricity. There is no distribution. There is no business. There is no roads. There is nothing. And to do this is way beyond what we ever have done before. Yes, we will utilize some of the experience we have from neighboring markets, especially like Pakistan, Bangladesh, India, but also utilize what we have from Malaysia, because we are not only offering voice to this market, we are also offering data. That's a part of the license. So this country is going to go from start to end in one go. They are not going to have 10, 15 years of development as most of the other markets have done. They are going to go right into the mass market, not only with voice, but also with data. Then one more point that I think it's important to remember for the international strategy, and Myanmar is a very good example on that. What we have found out is that if you want to be long-term as a foreign investor in these countries, you will never be able to do that if you are not relevant. You will always be seen as a foreigner. And if the only objective you have is to make money and send the money back home, being in Malaysia or being in Norway, you will have challenges sooner or later. So you have to position your business as relevant. And you have to be an important part of the society. And I'm not talking about charity here. I'm not talking about giving away money in charity. I'm talking about looking at yourself as an integrated part of the society in the country that you work. And that's why in our business, I think it's very important to look at how can you also fill unmet needs. So in Myanmar, for example, we are not only going to provide mobile phones, we are also going to look into medical services, health services, educational services, banking services over the phone. Not because that necessarily is going to give us a lot of money, profit, but because that's a part of developing the country, using mobile connectivity to fulfill needs that they do not have out in those villages. Or another example, as both of us have been talking about, the way we focus on corporate governance, the way we focus on transparency, the way we focus on people, the way we focus on talent development. All that is actually being a contributor to change the workforce in many of these countries. And that's being relevant. And I think it's very important, not only in our business, but for everyone that want to go abroad. Think about how can you be a part of, or how can you be an integrated part of the societies. That's the only way that you can be localized over time, and only way that you over time will be seen valuable in that society.